Hello viewers, welcome to my channel. I am Hashim Ali Khan. Now I am going to start the unit number 2 in advanced aspects of income tax. Already one unit I have completed in this subject of advanced aspects of income tax. In the first unit I have explained you about the PGBP, profits and gains of business and profession. In that unit I have explained 2 points, that is how to value the closing stock and depreciation according to the provisions of Income Tax Act 1961 for the current assessment year 21-22. So already, if you have not watched those videos, I suggest you to go to the playlist of my channel. Select the subject advanced aspects of income tax. Watch the first video, first unit. You will be thorough on how to calculate the value of closing stock and how to calculate the depreciation according to the provisions of Income Tax Act. Now in this second unit, I am going to explain you about the income from other sources, agricultural income and computation of tax liability. These 3 topics I am going to cover up in this unit number 2. So before starting that, I want to give the information regarding that second channel. I have started the second channel for IGCSE students. The channel name is Hans Accounting Institute. So go to the YouTube search, type Hans Accounting Institute, you will find my channel for IGCSE courses. So if you have any friends who are pursuing IGCSE course, recommend them that this channel will be very much helpful for them, and do subscribe that channel also. Before starting this video, I suggest you to take a screenshot of the notes which I have written. Then I'll explain about income from other sources. So already you know there are 5 heads of income. According to the provisions of Income Tax Act, the 5 heads of incomes are income from salary, income from house property, income from profits and gains of business and profession, capital gain and income from other sources. The first 4 heads are specific heads and the 5th head is the residual head. That means if any income does not fall in the first 4 categories, 4 heads, then that income is taxable under the head income from other sources as the last resort. The main aim is no income should go untaxed. If any income is there, if it does not fall in the first 4 heads, then that income will be taxed under the head income from other sources. So first of all, the SSC has to check each head. For example, income from salary. Income from salary, that head will be applied when a person receives a salary. When a person will receive salary, when there is employer and employee relationship is there and the employee is receiving the salary from the employer, then it is taxable under that income from salary. Income from house property. This head will be used when a person is the owner of house property and the owner has let out the house to the tenant and is receiving the rent. Then that rent is taxable under income from house property. Similarly, if a person carries on a business or profession, so any profit or gain arising from business or profession, that is taxable under PGBP. Capital gain. If a person during the previous year transferred a capital asset and a gain arised on transferring the capital asset, that is taxable under that income from capital gain. And lastly, income from other sources. If any income does not fall under salary or house property or PGBP or capital gain, it is taxable under that income from other sources. So we cannot give what all items are taxable under income from other sources. Any income. So here in examination they may ask you a theory question regarding give some examples of incomes which are taxable under the head income from other sources. So here you have to remember few examples of incomes which are taxable. The following are some of the important items of incomes which are included under the income from salary, income from other sources. What are the examples? Interest on securities. Securities are the debentures and bonds issued by the company or government. The government will issue the bonds, the companies may issue the debentures. So if a person is the owner of debentures or bonds, he will get the interest. The interest received on securities is taxable under income from other sources. Secondly, dividend or preference shares, dividend received from Indian or domestic company. Any dividend received either from the Indian company or from foreign company, it is taxable under income from other sources. Interest on debenture issued by cooperative societies. If the interest on debentures are received from cooperative society or clubs, then also it is taxable under income from other sources. Dividend on shares of cooperative society. Interest on bank deposit. Commonly we find most of the people will deposit the money in the bank. So interest received on bank deposit, that is taxable under income from other sources. Then winning from card games, lotteries, crossword puzzles, or any game of gambling or betting are of the nature, then all these incomes are called casual incomes. And the casual incomes are also taxable under income from other sources. Next, any sum received by the SSC from his employer as the contribution of any staff welfare scheme. Some of the employers will maintain staff welfare schemes. From that staff welfare scheme, if any amount is given by the employer to the employee, that is also taxable under income from other sources. Next one is rent or hire charges received by letting of plant, machinery or furniture. Sometimes an SSC will give on rent some plant, machinery, furniture. So the rent received or hire charges received from letting of plant, machinery, furniture is taxable, provided it should not be their business. If the SSC's business is of letting of furniture, then it is business income. It is not other sources. But it is not his business. But sometimes, casually, sometimes he is letting out the plant, machinery, furniture. So rent or hire charges received from letting of plant, machinery, furniture is taxable under income from other sources. Next one is rent from subletting the house. Actually, a person can let the house to the tenant. The rent received from the tenant is taxable under income from house property. But sometimes the owner, the landlord, will give the right to the tenant to make subletting. For example, Mr. X is the owner of the house. He has let out the house to Mr. Y. Along with that, he has given the right to Y to sublet the house. Now, Y has sublet the house to Z. So, Y is the tenant and also the landlord. From X point of view, Y is the tenant. From Z point of view, Y is the landlord. So, Y is getting the rent and Y is paying the rent. So the rent received by Mr. Y is called rent from subletting, and that rent from subletting is taxable under income from other sources. Royalty received. If a person received the royalty on the basis of any copyright or patent right, etc., that royalty is also taxable under income from other source. Directors' fees received by the directors of companies. If a director is receiving director's fees, that is also taxable income from other sources. Examination, remuneration received by teachers. Normally, teachers will get the salary from the management. The salary is taxable under income from salary. But apart from salary, the teacher may get some remuneration for invigilation of examination, or setting up the question paper, or evaluating the answer scripts. For this type of work the teachers are giving, it is in the nature of contractual obligation. In that case, the teacher's remuneration for extra work that is taxable under income from other sources. Agricultural income from foreign land. For Indian land, I will discuss after completing this topic what is the provision regarding Income Tax Act for agricultural income in India. But remember, agricultural income from a foreign land, it is fully taxable under income from other sources. Then rent from land. If open land is there, no construction is made, open land. If the open land is given on rent, the rent received from open land is taxable under income from other sources. Commission received. Some people will get the commission on chit funds or on insurance companies. An insurance agent will get the commission from insurance company. So this commission received is also taxable under income from other sources. Interest on security issued by a foreign government. If foreign government issues, gives the interest on security, that is also taxable. Remuneration received by MPs and MLAs. The member of parliament or member of state legislature assembly, these MPs and MLAs, whatever remuneration they get, that is taxable under income from other sources. It is not salary. Because there is no employer-employee relationship between the government and the MP. The MP is getting the salary from government, but there is no relationship of employer-employee. So whatever remuneration MPs and MLAs will get, that is taxable under income from other sources. Next, interest on loan given. If a person has given a loan to another person and interest is received, that is also taxable under income from other sources. Interest on income tax refund. Sometimes income tax department will delay in refunding the excess tax paid by the assessee. Mr. X has already paid income tax 50,000. Advance income tax he has paid 50,000. Later on, after assessing his income, his tax liability was only 40,000. His tax liability comes to 40,000, but he has already paid to the government 50,000. Now 10,000 rupees will be the refund of tax. Sometimes there will be delay in refunding the tax. In that case, interest will be paid by income tax department to the assessee. This interest on refund of tax is also taxable under income from other sources. Next, gift received on or after 1/10/2009. Any gift received by a person on or after 1st October 2009, either in cash or in kind, in excess of the limit. We'll discuss in the next video regarding what is the limit for this gift. That is also taxable. Next is forfeited. Forfeited advance money received. Nor in case of capital gain, sometimes a person will sell or transfer a capital asset. At the time of agreement, some advance money is received by the seller from the buyer. Later on, the buyer has refused or declined to purchase. In that case, the amount advance money given is forfeited. So if any advance money is forfeited by the seller in a transfer of asset, then forfeited amount is taxable under income from other sources. If the forfeited amount is received after 1/4/2014, then ground rent received is taxable under income from other sources. Any sum received under the Kemper insurance policy. In insurance, there is a policy called Kemper insurance policy. So if a person receives the amount from insurance company under Kemper insurance policy, that is also taxable under income from other sources. So in examination, you may be asked regarding, give some examples of incomes which are taxable under income from other sources. There is no exhaustive list. We cannot say what are all the incomes which are, because any income may come. We have given only a few examples of incomes which are taxable under income from other sources. Now the next topic is dividend. Dividend is a part of profit. Dividend is a part of the profit of a company which is distributed among the shareholders. Shareholders are the investors, owners. The investors have invested the money in the company. The company will earn the profit and a part of the profit will be distributed to shareholders. That is called dividend. So according to Income Tax Act, the provision regarding taxability of dividend is this one. Dividend declared by Indian companies. We classify dividend into three categories. First category, dividend declared or paid by Indian companies or domestic companies. So what is the rule? Dividend on equity share or preference shares paid or distributed by domestic company, which is in the nature of interim dividend or final dividend, is income of the shareholder and it is taxable under their income from other source. Any type of dividend, whether it is equity dividend or preference dividend, received by a shareholder from the domestic company, either it is a interim dividend or a final dividend, it is taxable under the head income from other sources. That is the provision regarding dividend declared by Indian companies. Now, dividend declared by person other than Indian company. Dividend is not only declared by companies, but a dividend may also be declared by any other institution, any other organization. Example, the dividend declared by UTI, the dividend declared by mutual funds. So these are the dividends which are declared not by companies but by Unit Trust of India, by mutual fund. Income Tax Act says again it is taxable under the head income from other sources. Whether the person has invested as an investor or it is his stock in trade, whatever be the method of making the investment, it is taxable under the head income from other sources. Next, dividend declared by foreign company. Now here you remember, there are many investors who invest their money in foreign companies. So in the SSC is getting the dividend from a foreign country. Then what is the tax? What is the rule in Income Tax Act regarding dividend received from a foreign company? Now I am going to explain you. Dividend received from a foreign company is fully taxable under that income from other sources. First point. Whether dividend is received from Indian company or dividend is received from a foreign company, it is fully taxable in India. Secondly, interest paid on loan taken to purchase the shares of foreign company is allowed as deduction only for interest expense, restricted up to 20% of gross dividend income. Sometimes an investor will take a loan for the purpose of buying the shares of foreign company. For example, Mr. X has taken a loan of rupees 5 lakh rupees from a bank at the rate of interest of 10%. So he is paying 10% interest to bank because from bank he has taken a loan of 5 lakh. So why he has taken a loan of 5 lakh? Because he want to invest that 5 lakh rupees in foreign company. The Income Tax Act says the interest paid on loan taken to buy the shares of foreign company will be allowed as deduction, but only to the extent of 20% of gross dividend income. Only to the extent of gross dividend income. Example, suppose 5 lakh rupees loan is taken, 10% is the rate of interest. So 50,000 rupees he has to pay the interest. Suppose if you have invested that 5 lakh rupees in foreign company and from foreign company he got the interest. He got the dividend. Now in 1 year the total dividend which he received is 40,000 rupees. 40,000 rupees. Now 20% of 40,000. 20% of 40,000, it comes to 8,000. Now deduction will be allowed 8,000 or 50,000, whichever is lower. 8,000 is lower. Only 8,000 will be allowed as deduction. So 20% of dividend income, that is a limit of interest expense. Only 20% of dividend income, that only will be allowed up to that limit will be allowed as deduction. No other deduction will be allowed from dividend income. only one interest expense will be allowed to the extent of 20% of dividend income. That much interest will be allowed as deduction. These are the provisions regarding dividend. So in this video, I have explained you about what is income from other sources. Give examples, 23 examples I have explained on those items of incomes which are taxable under the income from other sources. And the provisions regarding the dividend income by dividend from domestic companies, dividend income by any organization other than company, and dividend received from foreign company. These are the provisions I have explained. Remember, the problems are based on the theory. If you watch the theory with full concentration, there will be no problem while solving the problems. Otherwise, every problem will be a problem for you. So, take time with full concentration, watch the theory videos. 1 or 2 videos I am going to give you regarding the theory, then we'll start the problem. So inshallah, we'll continue our discussion on this unit in the next video.